So, Grant, we've talked about, several different estate planning tactics from just ensuring you have a good last will and testament in place. We've talked revocable living trust, irrevocable trusts, life insurance trusts. We haven't talked much about, if you are a business owner and estate taxes are on your mind. Talk a little bit about a strategy that you could implement as a business owner to try to reduce the value of your estate for estate tax purposes.
Yeah, so what I think of first here is a family limited partnership. You'll sometimes hear them called FLPs. And with the family limited partnership, it is a recognized business entity that is formed with whatever state of I say incorporation, but it's again a limited partnership. And really, the idea is it's for assets that you intend to stay in your family, that you want to use that entity as sort of an estate planning tool. And the idea is that, I guess, first of all, you can kind of use it to freeze the value of assets as you put those assets into the FLP. Or on the other end, you might use it as a gifting mechanism where you gift shares of the FLP to family members. And the nice thing about it is you can keep a controlling interest while you're alive. And so, you're not necessarily losing control of the entity, but you are getting some of the benefit of utilizing your lifetime exemption through the entity. Again, you can either put assets in and kind of freeze that value as you do so, or use it to gift shares of the FLP to beneficiaries that you ultimately want to have ownership of it.
Yeah, it seems like a great strategy to retain control of a business and yet, start transferring those LP shares to the limited partners to reduce the value of your estate for estate tax purposes. And I know there are instances in which, and you would want to work with qualified advisors, a CPA, and an attorney, but I believe there are instances in which those shares could be discounted. For lack of marketability and
Exactly.
lack of liquidity.
Yeah, and that's exactly what you would think. I mean, you have a closely held business entity, in terms of like a family business or whatever. I mean, obviously that's going to be really hard to value. And like you said, because it's not as liquid as something that's publicly traded, then you've got to have some sort of discount on that value. And that can really be helpful for estate tax planning purposes.
Yeah. And we've talked about, just in general, reducing the size of your estate. We haven't actually specifically mentioned just making gifts. Right. You can gift up to the annual exclusion amount to as many recipients, different recipients. And of course, you can gift split with your spouse such that you can give double the annual exclusion amount if both you and your spouse, file a gift tax return to report that gift splitting. But I believe you can do that with as you're gifting the limited partnership shares out as well. I believe you can
that's
gift
exactly
split
right.
with your
And
spouse.
one of the things I think that is really useful about that right now is you mentioned the sunset on the current exemption amount for the estate tax. And so right now, while it's really high, we don't know. It might go up. More likely, it might go down. Of course, it might just kind of stay the same and just continue increasing with inflation. But if it were to go down, if nothing was done, we're going to go back down to a very, very low number in terms of the estate tax threshold. So it would be essentially, 5 million, and with adjusted for inflation, up to about 7 million. Well, if that happens now, why would you not want to go ahead and make some gifts before that happens at the end of 2025 and use all of that 14 million exemption that you could? I would rather make sure that even if I have a taxable estate, I've got the benefit of 14 million than 5 million, or again, adjusted with inflation, about 7 million. So we're seeing lots of gifts right now like that to make sure that people can use all of that larger exemption amount. And a family limited partnership is just one of the ways that we see people making those gifts.
Yeah, that's a great point. We talked about the irrevocable trust earlier, but that would be a way to, outside of the FLP discussion, that would be a way to, set up that trust, fund it this year, sure, lock in this year's exemption amount now, and remove all that future appreciation from your estate for estate tax purposes. But yeah, I think the FLP can be a really unique, really effective way to retain control of your business and plan for estate taxes.
Absolutely.